A lot of reaction to the Fannie and Freddie news this morning, including this morning from our friend Warren Buffett, reacting to that news for the first time. He is on the phone, and so is our own Becky Quick. Morning, hon, where are you?
Good morning, Carl. I'm actually at the beach this morning. Picked a heck of a day to be out, but fortunately you and Joe are both there watching everything, and we're being joined right now by Warren Buffett. Mr. Buffett, thanks for joining us this morning. I wanted to get your thoughts to this plan for Fannie Mae and Freddie Mac.
Well, I think the Secretary did exactly the right thing. I don't think there was an alternative that was anywhere close to this one in terms of calming the markets, in terms of providing an ongoing function to the two that makes any change less abrupt, the changes that are going to occur with the two companies. So I wouldn't change anything in the plan myself.
There are some people who would say, why not wash out the common shareholders at least? Why put the taxpayers at risk? What would you say to that?
Well, the common shareholders are going to get nothing until the Treasury gets paid back. And even then, as I understand it, the Treasury is getting a warrant at a nominal sum for 79.9% of the resulting common. So assuming there is anything left for the common 4 or 5 years down the road, the Treasury will get 80% of it. So they're getting paid very well for stepping in. And like I say, the question of whether the common gets anything is problematical. The common is an option at this point.
Mm-hmm. You know, earlier this morning, Steve Leisman was talking to the Secretary of the Treasury and pushed him on that point, trying to figure out how much taxpayers would be on the line for. I guess there's no way to really know that, but do you have concerns about the taxpayer?
Well, the Treasury, in effect, for them to lose anything, the preferred and the common have to get wiped out, and that may very well occur. So the Treasury is on the hook for something, but this is the best solution. I mean, I think they've committed up to $100 billion to each company, but as a practical matter, they're going to have to be in this picture until Freddie and Fannie have shrunk considerably in terms of their portfolio and really have gotten into a profit-making position. And it's how far the housing decline goes will determine how much, if anything, the Treasury loses. But whatever they lose from this plan, if they hadn't acted, there were going to be greater losses down the road. Freddie and Fannie had played out the string as they were, and the government was on the hook. I mean, they got in this position many, many decades ago when they got into this sort of half-slave, half-free position where they said, we don't guarantee Freddie and Fannie's obligations, and wink, wink, and so the whole world assumed it. But in the last, 6 months or so, the spreads on the mortgage-backed debt of Freddie and Fannie that was out there, it started widening out. So they had this ambiguous situation. This clears up all the ambiguity.
You've spoken with the Secretary, with Secretary Paulson about this?
Just yesterday, he called me. We just had a very short conversation, but it was fait accompli. I had nothing to do with this proposal at all.
Okay. The Paulson has also expressed some concern that these two programs, both Fannie and Freddie, are just too big. You agree that the portfolio should be scaled back?
Yeah, well, I would probably go even further. They're talking about scaling it back to $250 billion each, and the portfolios are what really got them in trouble. The portfolios were the ways that the managements of Freddie and Fannie had tried to juice up the earnings, basically, because the insurance guarantee that they were giving on mortgages, I always thought that made a lot of sense, but the portfolio operations enabled both of those entities to use, in effect, government-related borrowing costs and sort of unlimited credit to set up, the biggest hedge fund in the world. And as they started responding more and more to the desires of Wall Street for steady and increasing earnings, they first expanded the portfolios to run an enormous carry trade, and then they started playing games with the derivatives involved to report figures that really weren't accurate. So the portfolios are poison, and they aren't really needed to carry out the function of Freddie and Fannie. The government guarantee of mortgages turns them into effect government bond type instruments, and those guarantees ensure an enormous margin market worldwide when made explicit as they have now. So I don't see that the portfolio activities are necessary, and in fact, I think they can be quite mischievous.
In the past, you've owned major stakes in Freddie Mac. You got out several years ago.
Berkshire was the largest shareholder of Freddie Mac in 1999.
But you got out, and is this the type of thing that would tempt you to get back in?
No, I don't think there's much to get back into. We were with them. Like I say, I think we owned 8.5% or so of Freddie Mac in 1999. But they unfortunately followed the course of Mae West when she said I was Snow White, but I drifted. And both Freddie and Fannie not only drifted, I mean, they were blown away.
Yeah. Joe and Carl?
Yeah, thanks. But I did have one. Mr. Buffett, I know that the size of Fannie and Freddie, you made comments that the only entity that could help would be probably the U.S. government. But let's just say that you were the U.S. government here. The terms of the deal, would Warren Buffett be happy if he was the government right now? I mean, is there anything that you would have done differently to protect taxpayers at this point? Is it a good deal?
Well, it's the best deal and the most sensible deal available now. Now, you can argue that there should have been some different rules put in decades ago in terms of what these companies have done, and it wouldn't have come to this. But those rules weren't put in by this administration or this Congress or this Treasury Secretary, and they faced the problem of, in effect, $5 trillion plus of a combination of portfolio and insurance out there, and really chaos in the housing and mortgage market. So I would have made exactly the same. I would have insisted on something like that. Really 80% interest at a nominal price to get in there in case the common did have value at some point. Then I would have insisted on the priorities over the common as preferred. And I think they made the right deal. It may cost them some money, but it's going to cost a lot less than anything else they would have done.
I mean, you could argue about Bear Stearns, Warren, about whether the systemic risk of Bear Stearns would have affected, securities worldwide. Hard to argue with this one. I would say it being a Berkshire Holdings, I mean, you're probably breathing a sigh of relief. You've got some derivatives. You've got, across the board, a lot of different securities that could have been affected very negatively, I guess, if this hadn't been done. You must be breathing a sigh of relief as well, right?
Well, I suppose you could say that. Although, Joe, I would say that if there's chaos in the market, it probably net is good for us over a long period of time. But you're quite correct that if Bear Stearns was an 8.5 on the financial Richter scale, this was about a 9.9 or something of the sort. The government really had no choice but to do something, and then the question is whether they did the most sensible thing, and they did do that.
Right. Warren, you've been on this show more than a couple times telling people that the economic correction we're in is going to be harder, deeper, more severe than a lot of people expect. Has the move by Treasury done anything to alter your macro view?
Well, they've certainly done the right thing. Where it would have been without doing this, I think, would have been worse than having done this. Now, it doesn't solve all our problems or anything of the sort, but it's a big step in the right direction.
All right, Warren, I want to thank you very much, Mr. Buffett, for joining us this morning. We do appreciate it. Appreciate your weighing in. And Joe and Carl, I'll send it back over to you. And Carl, you asked where I was. Tell you the truth, I'm actually in Cranmer's hardware store. I didn't have a landline at the beach, so I've been running up and down and barely made it to the phone in time. So I have to thank Cranmer's in Beach Haven, New Jersey, for actually letting me in.
Are you getting a free drill or screwdriver? You better.
I paid them $40 to let me use their phone. I'm not even kidding.
Thanks to them, Beck.
Thanks, guys.
We'll see you.
I hear it. There it is. All right, thanks.
We'll see you next week.
All right, bye-bye.